This is silver priced in US dollars. That's the weekly scale, and silver is on the way up big. Yes, the price action that we are seeing here has, in my opinion, completed a 5-wave run right from the bottom. It is registering 1, 2, 3, 4-week move. Okay, 4-week move. If I'm right that we have actually hit the top of the first wave of the third wave on this scale, then we're going for a correction. The correction should last easily 1 week, could last even longer than that, like 2 weeks. I don't think it's going to go for 4 weeks, but 2 weeks yet, between 2 to 3 weeks. On the short side, I would say it's probably a week and a half. Yes, a correction around here that could see silver coming back towards 15.10, maybe around 15. If I'm right, that's a buying opportunity. Silver is unlikely to go back to test 14.7 now. I would be surprised. Could do. That'll be an extreme correction. Yeah, if it goes down there. What it must not do, of course, is break through the bottom. Yeah, the origin of the move. And I would say already reaching towards 14.6 would be a sign of sales weakness. Okay, so right now I think silver is going to correct, but this correction is a buying opportunity. Silver will prepare the third wave. Once the second wave is done here, silver is going to shoot there. So it's going to go towards 16.2, and here we're going to have again 2-3 weeks of going sideways or hugging the level here, and then preparing for the next leg. Okay, silver is on a long run now that could last for many months. Yeah, that's my reading of the situation after the very sharp break in the DX and huge run in the other currencies. Yeah, especially commodity currencies like US dollar, Canadian dollar. We have seen a very strong performance there. Precious metals are going to continue with the run higher, even though we might see short-term some lateral movement. Don't be discouraged. It seems to me that the bull is becoming fairly entrenched. This is the daily now with a 1, 2, 3. That's like the fourth wave, and that's the short fifth leg. Now, clearly, you see the need for a correction of at least 2 weeks. Do you see that? Because it corrects all of that. That's many days. Yes, that's many days. So we do need a balancing move here, second wave, and it could go up and down here several times before silver is ready to give us the very big next move. Let's have a look at 2-hour scale. And I think that silver convincingly hit the top right here. That's a 1, 2, 3, 4, 5. That's presumably A. I think that could play out as a B. You can see my arrows. They do not date from today. That's the idea I've been working with in the last few days. So I think that if this wave count is correct, what's going to happen is that we might see a slight pop here. But my idea is not going to, that silver is not going there. If it does run through this level and it remains consistently bullish, then it tells you that the wave count I'm using is not bullish enough. Yeah, is not aggressively bullish enough. It has to be much more bullish, meaning I have to break it down in a different manner and to allow, yes, the structure would allow for consistent rally. But right now I'm looking more at the conservative side because I'm convinced by this, that this is actually a fourth wave and that is the final shot. So I'm taking this as an A. My expectation that will turn into a B, okay, around here, and I will not be surprised one bit if it goes down back to 15 or 14.9. In fact, I would think that's a buying opportunity, yeah. Now, having said that, if you buy it here, that does not mean it's going to shoot about 15.55 and that's it. It's just continue higher. I don't think so. I think it will struggle to run back to 15.55, but then it's going to come back. Because don't forget, we need those 2 weeks. We need the 2 weeks correction before it is ready. It's gathering enough steam, yeah, enough strength to continue with the movement, the bullish movement. Here's gold. that is the quarterly chart of gold. And there is no question that gold delivered really inspiring performance. You can see the close. If we were to close today, this quarter, but we do have another week to run. If we were to close today, obviously you can see the quarterly close would be far higher than anything we have seen for many quarters. Yes, and that speaks for itself. That speaks for itself. I left quite a few labelings here on purpose. Those labelings do not work anymore, and I'm going to show you what I'm going to take out, and it is an example for you to see how price action eliminates certain options. And it's never a bad idea to work with various options. Yes, you to keep your mind open. Various options, if you can see them, you need a bit, to work on that. Not everything is springing to mind just like that. Sometimes you have to work on the chart, and you also have to have an open mind, imagination. Yes, to be able to see various alternatives. But when you have those alternatives, put them there and work with them, and as you get more and more price action to go by, the price action in itself would eliminate certain alternatives, because we work with certain set of rules, and the rules are helping us to weed out those alternatives that are not useful for us anymore. So I'll go step by step. Let me go to the weekly, to the monthly, and you can see what robust performance we have seen here this past month. Super inspiring. What is the one set of labelings that we don't need to work with anymore? Is right here. That's an A, that's a B, that's a C, D, E. Not possible. Why? Well, look at this. So this is out. This was calling, in fact, for a huge break. Remember that? So that's gone. And now the bull is decisively in the driving seat. Yeah, the bull is decisively in the driving seat. And I will not hide from you the fact that this is just one option. That's an A, something that I've been working with for a long time. Yes, you remember, that's an A, and then an A, B, C, D, E. So that's the end of our E leg, most likely. And that's the end of the B leg, with this being an A, B, and we're going up with a big C. Now, yeah, technically, definitely possible. And we have here a few projections. Equality between the C, the C and the A would take gold to 1593, 1593, or let's say 1594. Extension of, will take it to 1.618. Extension will take it to 1797 or 98. Okay, we still have a long way to go. But there are several analysts out there who focus mainly on the fundamental side of things, have put forward some very strong arguments that gold might be undergoing a very serious revaluation. And I don't know how many of you are aware or are familiar with the Basel III Accord that is drawn up by the central bank of all the central banks in the world. The central bank in Switzerland, not of Switzerland, but it is based in Switzerland, and it is the, if you like, the supranational central bank that is issuing the guidance and the rules book, if you like, to most banks in the world. And up to the recent version, not inclusive of the recent version, gold was classified as a fairly risky asset. So if a bank had a lot of gold, the bank could not use the face value of that gold 100%. It had to discount it because it was not risk-free. A risk-free asset is, for example, cash. Yes, if we can't trust cash, then what can we do? So when a bank has a certain sum of cash in its deposits, so this is risk-free. The money is there. But gold was not on the same footing. It was not being accorded the same level, the same importance in the calculations. But that's something that I learned recently, and it is extremely important. Even if you can't be bothered with all these legal definitions and rules that govern banks, etc., this one is something you really want to know about. It is very important. Beginning the 1st of April 2019, which is not a long time ago, Basel III Accord put cash and gold on the same footing, meaning a bank that has now a substantial amount of gold is going to put in its books, we have X amount of gold, and they're going to be taken at market value, face value. It's not going to be discounted because it is now considered as good as cash. Now, there is a very profound statement there in changing the status of gold from being discounted, risky asset, into being accepted as good as cash, 100% in its value. It's effectively telling you we're taking gold as money. You're taking gold as money, no more discounting it, and that in itself could bring about a very profound reevaluation of gold, not just as far as central banks are concerned, that are, by the way, they are buying right and left. Right and left, they are buying gold. They are buying a record amount of gold. Of course, that could surface and affect worldwide demand in gold, and that could be behind a movement that could see it flying well above my target of the end of the sea. In other words, what I'm saying is that the base building that we are seeing here could serve the purpose of sending gold far higher than the limit that I'm showing here. Now, you know that I like to take the conservative line. I would say at this point I would be very happy if my projection of a very strong bull run is getting underway, and we'll see, let's say, easily the projection of A equal C, taking gold to 1,594 and maybe even 1,798. But I would say if it does reach this level and it sits around here and everything else still looks great, like dollar index still looking like it's got a long way to go down. We're seeing the commodity currencies recovering strong, like Australian dollar performing well, Canadian dollar performing well against the US dollar, and mining stocks still very buoyant. I would say if it sits around here, then the prospect, of course, of lifting the lead will look very real and very likely. Okay, so that much I would say concerning the long term of gold. That is the monthly. Let's jump to see the weekly. Here's the weekly. And if we go with the idea that that's the E leg ending here or here, we are looking at several weeks of correction, similar to what we have discussed in the case of silver. Several weeks of correction. So if we get something else, and what could that be? Very simple, extension of the rally. If you get an extension of the rally, then this wave count is not aggressively enough from the bullish point of view. Right now, I'm taking this as a 1-2, or it could even be a 1-2 here, and the E leg ended here. But the end result will be the same. That's 1, 2, 3, 4, 5. You get your fifth leg ending here. And you can see my arrows do not date from today. My idea was that it's going to come down. So if gold takes a swoon, dives towards 1,360, 1,350, don't lose heart. It's going to come back. It's going to get the support. It's going to come back. I do not think that this is a false move. Okay, meaning I do not think it's going to do this. Okay, I think that there is staying power in this bullish movement, and it is likely to find serious support around here and bounce up and down. If that goes on for 2-3 weeks, even 4 weeks, that is a good preparation for taking gold a lot higher. Let's have a look at 60 minutes quickly. And this is also, in my opinion, is shaping up as an AB. Do you see? This is prepared for you today. I think either the B is over right at this spot, or we're going to have another twist around here, and all of this should be taken as an A, B, C, D, E like that. If that's correct, very simply, we are going to go for that correction, A, B, C, and gold will go somewhere around here. Okay, at which point, of course, it's likely to find support and it'll become a great buy, and gold's going to come back. It's not going to come back, as far as I'm concerned, using this waveguard. It's not going to come back to the extent of shooting above 1,412, not by a big margin, maybe by a bit, but it's going to continue to bounce up and down between these two limits until, as I said, it's ready after, let's say, easily 10 days, 2 weeks, even 3 weeks. It's ready to carry a lot higher.